Hello everyone, welcome to this lecture number 4 of week 2. In this week we have been discussing about various system of marketing metrics, and in today's topic we will be discussing about a specific topic termed as DuPont model and how the sales are decomposed in terms of multiple metrics. As all of us know, sales can be perceived from multiple dimensions. For example, sales can be calculated in terms of the performance of the average salesperson. Sales can be calculated in terms of purchase by an average customers. Sales can be calculated in terms of the average sale made by a retailer or a distributor. So, or sales can be calculated in terms of what is the revenue generated and what is the price per unit. Okay. So, there are various ways sales can be perceived. Ultimately, we will get the same sales figure, and these are known as identity. Okay. So, in today's lecture, in today's sessions, we will be looking into how sales and other metrics are perceived from various dimensions, why we need to understand the chain of metrics rather than looking into one isolated metrics, right. So, let us start with this session. So, first we will try to understand why do we need for a system of metrics. A single metric rarely captures the full picture of the marketing performance. Let us say if I give you that overall revenue is 1 crore for this particular month, what does it speak? Probably it does not make much sense, because I do not know what is the cost associated, I do not know what is the investment made. So, unless and until all these figures are in place, I cannot interpret this isolated matrix which is called the revenue for the month is 1 crore. So, that is why it is important that whenever we are speaking about a metric, the backdrop of that metric is being explained. And how can we explain the backdrop of the metric? In terms of some other associated metric in a systematic way. And that is how we have to explain the system of metric rather than explaining a individual and isolated metric. Managers need a connected system of measures rather than the isolated numbers. Isolated numbers does not make much sense in silo. They are only meaningful when the backdrop of the story is being explained in terms of the associated metrics. The purpose is not only to report the results, but also to explain how those results were being generated. For example, it will make more sense the moment we explain that there is an increase in sales, and probably the increase in sales can be attributed to the incremental increase in marketing expenditure. Then we can take a decisions whether a marketing expenditure is worth it or not. Or if we explain that profitability of our organization is increased not because of increase in sales, but because of we have saved a lot of money in terms of our production efficiency. The cost of goods sold has decreased, that is why the organization is deriving more benefit, right. So, that is why you need to have an understanding of the entire story rather than an isolated metric, and that is where the concept of system of metric comes into picture. System of metric is nothing but understanding the related metrics together rather than trying to explain them in isolation. So, we will be looking into a model called DuPont model. The DuPont model is a financial framework used to understand overall firm performance by breaking the return on asset into two component ratios. It helps managers see whether the performance is driven more by the profitability, more by a relationship between sales and cost, or it is driven more by the asset efficiency. What is the return on asset? What is the sales to asset ratio? So, we can look into the performance of the business from these two dimensions, like sales to asset ratio as well as the profit to sales ratio. So, if we have a clear picture about both these dimensions, in that case probably we can take better decisions. This is a popular model for decomposing the firm's success into some interpretable parts. So we will have a detailed discussions about the various components, various breakdown process of the DuPont model in the next slide. So basically let us try to understand DuPont model is a amalgamation of two component. In one component we talk about the net profit to sales. What is net profit in comparison to overall sales? So that will tell you whether how your business is efficient in terms of deriving the profit from the revenue. Then second aspect, second dimension that we look into is that sales to asset ratio. Whether our assets are being utilized properly or not. Whether we are deriving, we are getting business from the applied asset or not. So both these dimensions are important, and both these dimensions will together explain the fact of return on the applicable assets. So the three rightmost columns of the boxes in the figure represent the DuPont model, right? The two leftmost columns of the boxes represent a particular method of breaking apart net profit and total asset into smaller components. So if you look at the leftmost boxes, okay, so you can see various cost associated, various asset associated. So we will try to look into one dimension at one time. So to look into this sales versus profit ratio, because sales and profit can be looked upon, there is an intermediate variable which is cost. Again, cost is of various forms. One is cost of goods sold, then administrative, general, sales cost, marketing expenses, etc. Then comes interest expenses on the loans that you have taken, cost of capital, then income taxes applicable, right? So first we will look into the cost. So measures of the effectiveness with which the assets are used to produce the revenues, fine. So we will first look into the associated cost. So what are the various kind of cost? Cost of goods sold, COGS, then SGA expenses. SGA means general, sales and administrative expenses. Interest expenses means raising capital for the business, you have taken a loan from the bank. So every year you have to pay back the interest to the bank, right? So that interest expense and the applicable taxes, they will be amalgamated as the total cost associated with the business. Now we will also have total sales that is generated in the business for a given financial season or given financial year. So by deducting the total cost from the total sales, we will get the net profit. Now net profit versus the total sales, it will give us whether the business is lucrative or not, whether we have been able to derive a significant percentage of our revenue as profit or not. So this basically talks about the efficiency of our operations, efficiency of our expenses. So and it is derived in terms of the final matrix, final outcome matrix, which is called the net profit to sales. Now let us look into the second dimension, where we will look into the sales to asset ratio. It measures, these are basically measures of the investment in the working capital assets needed for sustaining ongoing operations, as well as measures of the investment in long term revenue producing assets. So basically operating assets as well as permanent assets or long term assets. So what comes under operating assets? It is the cash that is with the business, it is the account receivable, it is the inventories left, it is the marketable securities and some other current asset, means which can be immediately liquidated. Then non-current assets, which are basically the long term assets which cannot be easily converted into liquid cash. So it can be your land, it can be your building, it can be your value of your machinery and equipment, it can be some intangible value, right? So this amalgamation of this current assets and non-current asset give you the total asset of the organization. Now for a particular financial year, we have the total sales, and the ratio between this sales and total asset is called the sales to asset ratio. So if we have these two metrics, two outcome metrics in place, we can understand the efficiency as well as we can understand the utilizations of the assets, and this gives a holistic picture of how our business is performing in the market landscape, right. Let us now try to understand why there is no single sales breakdown. Because several entities outside the firm are involved in creating the revenue. So this can be the sales force because they make the sales of the products. It can be the customers, they purchase the product. In their absence, there will be no sales. It can be the dealers, it can be the intermediaries, and it can also be the competitors, right. So because of this, there is no one universally accepted way to decompose the sales. Sales can be decomposed in terms of number of customers multiplied by purchase per customer. Sales can be decomposed in terms of number of salespersons multiplied by average sales made by an average salesperson. Sales can be mentioned, sales can be derived in the dimension of, let us say, total number of dealers and average sales per dealer. Sales can be explained in terms of, let us say, number of units sold multiplied by number of, price per unit, fine. So in modern firms, success depends not only on the cost control and asset efficiency, but also on the marketing and sales generation. Therefore, sales should be broken down with at least the same clarity as the cost and assets. This is the main motivation for a system of marketing metrics, right. As multiple entities are involved in generating the sales, salespersons are involved, customers are involved, intermediaries are involved, the price is a direct determinant of sales. That is why sales have to be looked from various dimensions, then only we will be able to optimize the sales or optimize the profitability of the organization. If we look at it only from one dimension, probably we will not be able to diagnose where the problem lies, right. So let us say if we look at it only from a customer's perspective, then in that case we will not be able to address the issue of cost incurred in the process of selling. So that is why all dimension needs to be looked into simultaneously. Let us now look into the central idea of decomposition. Decomposition means breaking a large metric into a smaller interpretable components. Instead of looking only at the final sales, the drivers behind the sales are being examined. The drivers can be customers, the drivers can be sales force, the drivers can be dealers, the drivers can be price. This gives managers more diagnostic detail and more control over the business decisions. Let us say if we try to interpret sales in terms of price and number of units sold, then in that case, if the revenue is, let us say, lesser than the last year, and we can see that price of the product is being increased as compared to last year, we can interpret something like there is a possibility that the demand is decreasing because there is an increase in price, right. So similarly, if we look at it from the customer's point of view, and if we see that number of customers remain the same, but the quantity demanded per customers is decreasing, then we can probably have an indications regarding that the purchasing power of the customers are going down for our segment, or there can be a possibility that the economy is not doing great. Similarly, we can take interpretations regarding the from the perspectives of dealers. So if dealers are selling lesser amount, probably the competitors are providing them with more lucrative offer than we are providing. So that is why in order to understand the exact picture, in order to understand the various views regarding the sales process, what we need to understand is that various dimensions of looking into sales as a metric. Now let us look at the 4 valid ways to decompose the sales. Sales equal to number of salespersons multiplied by average sales per salespersons. So we are from in the first place we are looking sales from a sales force point of view. Second dimension from which we can look into sales is that intensity of distribution. Number of dealers, ACV, all commodity volume, means the number of dealers who are keeping your product, multiplied by average sales per dealer, all commodity volume, right. So, basically how the dealers are taking your business forward, taking your products to the customers. Then third dimension, sales can be looked from our dollar share multiplied by the total market share. So, we are looking into sales from the perspective of a competitive landscape. What is our market share and what is the overall demand in the economy? From that also we can calculate the sales for our product, for our brand, for a given period of time. Then the fourth dimension from which we can look into the sales is the customers dimensions. So, what is the total number of customers and what is the average amount, quantity of this one products bought by an average customer. So, number of customers multiplied by sales per average customer. So, these four dimensions will give you the exactly same value, right. So, these are called identities. Now, let us look at one of the inquisitive question, which is why sales is harder to decompose than cost. One thing is that there is no single universal breakdown of sales across all the businesses, right. So, in some of the context, sales should be looked from salesperson's point of view. In some other context, probably sales can be looked from the customer's point of view. There is no single universal breakdown process or universally accepted preferable breakdown process. Revenue creation involves many outside entities. As we have already mentioned, these entities will involve the customers, the dealers, the sales force and the competitors. Because of this, multiple valid decomposition of sales can exist, right. But on the other hand, cost has to be decomposed only in terms of the defined set of metrics: cost of goods sold, general administrative cost, cost related to interest, cost related to taxes. Let us try to look into some of the important insights. Like the DuPont model, which decomposes the sales into from two dimensions, performance of a business from two dimensions. One is profit in comparison to sales and another one is that sales in comparison to total asset of the organization. So, like the DuPont model, each of these four ways to compute sales is also an identity. I have already mentioned these are called, each of this method, each of these formulas are termed as identity. Sales will always equal number of customers multiplied by average sales per customers, and similarly for the other forms. So, whichever method, whichever dimension you calculate the sale from, you will always get the same value, whether you are calculating it from customers dimension or you are calculating it from the sales force dimension. Even though they are identities, they can still provide the valuable insights. If you look at the sales from customers dimensions, if you look at the sales from sales force dimension, they will provide you with, they are identical, they are going to give you the exactly same value, but if you look at from different dimensions, different insights can be derived. Further decomposition is possible. The outer ring sales components can themselves be decomposed further. So, for instance, sales per customer can be represented in terms of purchases per customers multiplied by average sales per purchase, or sales per customers can be derived in terms of unit purchase per customers multiplied by average price per unit. Fine. Now, let us look into one example, and in this example we will look into the decomposition of sales in terms of customer. Number of customers 2000, sales per customer means this is the average sales per customer, it is 5000. So, therefore, the total sales will be 2000 multiplied by 5000, that is 1 crore. So, if sales fall, the manager can ask, did the number of customer fall or did the sales per customer fall. Similarly, the same thing can be, same value of 1 crore can be arrived from the dimension of sales people. How many sales people are there and what is their average sales in that given period of time, you are going to get the exactly same 1 crore value. But If you calculate it from the dimensions of sales force, then in that case you will get different kind of insights, whether number of salesperson has been reduced or the performance of the salesperson has got reduced or increased, right. So, this is how various insights can be derived if we try to decompose the sales from various perspectives or various dimensions. So, this is what is for today, and I would like to conclude this class with this sentence: just as finance decomposes the profit and assets, marketing must decompose sales to understand the performance clearly. So, we are left out with only one session of this course, and I will discuss this last sessions tomorrow. I hope to see you in the next class. Thank you.